Hello, fellow traders. 'Tis I, TheRumpledOne. Tuesday, January 29, the year 2019. Let's talk trading. Bouncing back. Well, if you watch one of my last two videos, you know that I was under the weather last week. And so, now I'm kind of bouncing back. But what that has to do with trading is when you're sick or you have something major happen and it kind of knocks you down one way or the other. It could be a devastating trading loss. For example, um, it kind of makes you see things from a different perspective. It's not something you do intentionally. It's something you do naturally. When I'm sick, the only thing, the main thing is, you know, getting back to health, getting well, getting rid of the illness. The other stuff just kind of falls by the wayside. It's like get this laser focus. What do I need to do to get back to where I was? And then once you get back, you just kind of go back to normal. And you don't really think about, well, what do I have to do to make sure I don't go back to being sick? And see, that's where a lot of people fail to learn. It's like that saying, when things are going good, that's not time to party. That's time to really take a look around and go, okay, let's batten down the hatches, let's fortify the walls, and make sure everything, stays the way it is. You don't want to wait for something bad to happen and then try to fix it. You want to prevent it from happening in the first place. You know, so it's kind of like preventative medicine. So maybe what you have to do is some preventative medicine for trading. And what's the biggest piece? You guys, you saw this one coming, right? You know what I'm going to do next. I'm going to talk about money and risk management. That's your preventative medicine, or part of it, when it comes to trading. No matter what you do, when you click that mouse, if you've engaged in your money and risk management, it doesn't matter how well prepared or how sloppily you prepared that trade, because the worst thing that could happen, barring some really unforeseen circumstances, is that you're only going to lose what you're willing to risk. Okay? And that's the biggest thing. That's kind of like your safety. Saying that, no matter what, this is it. This is the line. This is the bail line. This is the cut loss line. This is I am out of here line, because this trade ain't working out. But, there's many other things you can do to prepare. Go over your notes, have your trading plan, go over your trading plan. Make sure you execute according to trading plan, all those little tiny details. But the main thing is just to make sure if you slip up on one of those, this is not the one that you slip up on. So let's go ahead and take a look here. Weekly, we're hovering right around that weekly open. So you can see here we had entered the upper wick zone. Now somebody was asked me out on YouTube about where do I get zones? Well, zones are areas basically between two lines is the way I look at it. So right here, this is the upper wick zone right here, because here's the upper wick. So you got the high and the candle top. Okay, so in here, that's the upper wick zone, and here's the candle bottom and the low. So that's the lower wick zone. And so you can almost visualize it. You don't even, after you understand it, you don't even need the lines. Like right here, you can say, oh yeah, price went into the upper wick zone, came down in the lower wick zone, and exited. And we still have one that hasn't filled, pound dollar. That's the gap right here. So about those zones. So yeah, okay, now we're 4 pips above the open. So price is just hovering, and we've got about a 63 pip range, so rat zones in effect. And we got close to that yearly open once again, but not quite. You can see here we're hovering right around the daily open. So not much happening movement-wise at the moment. You can see here's yesterday's high, yesterday's low, the first day of the week. And you can see we exited. Nice little profit there, but now we're back inside the first day of the week range. Once again, we are below the last 12 months worth of opens. Still inside the first day of the month's range. And we've only got a couple more days this month. And yesterday we had an inside bar. And right now we are inside that inside bar on the daily inside bar. And you can see we had a weekly inside bar 3 weeks ago. We're inside of that. And then 2 months ago, we had an inside bar, but we're still below that. So these inside bars, you can think of those as zones. You know, this is the zone here. And then here's that zones here on the daily. We have it shaded. And you can see we've got the Australian yen, Swiss franc yen, pound Canadian, pound yen, and pound dollar also put in inside bars on the daily yesterday. So you might want to take a look at those if you like trading those pairs. And the range only 55 pips, kind of anemic. Only 3 over 100. Not much happening today. Okay, there's the weekly highest open here. A weekly H1 highest open. So you see a nice pullback off of that. And there's the daily lowest open right here. See, the daily and the weekly highest open happen to be the same. And here's the weekly H1 lowest open, was right there. Okay, here we had the pivot above the open, but before the buy zone, so really not much of a bias given, but price did hit the pivot and it went through the sell zone up into the buy zone, and right now we're back to the open. And there's the daily open and the weekly open, only 3 pips apart. So once again, the person who asked, the trader wants to know about zones. You see here, we draw the buy zone off of the daily open. We have the daily open, so we've got it set for daily open plus 8, daily open plus 10. So we consider that the buy zone right here. Now, if you wonder where we got these numbers, what we determined, Michal Kreslik and I, this was probably a dozen years ago or so, on the buy zone, on the pairs, we noticed we ran a whole bunch of statistics. He came over from the Czech Republic, stayed with me for, I don't know, the whole summer, I think. And we would get up in the morning, and he had a couple computers in one of my bedrooms, and I had like 5 computers in the other. And all we did was crank out statistics, just, all day long and half the night. And we realized that if a pair, on average, if once a pair moves 7 pips, excuse me, pause. Anyway, we found out that if a pair moves 7 pips from one position to another, chances are it's going to keep going that same direction. So that's why we have it at +8, +10. That allows for spread. Okay, right here, Larry, live trade. Green rat going long. So the rat zone, current daily high, -20 pips. Current daily low, +20 pips. That forms the rat zone. Once again, from statistics, looking at the size of the wicks of the daily candle, most of the time the wicks are bigger than 20. So what that meant to me was, if you buy somewhere between 0 and 20 off of the low, or if you short somewhere between the high and then -20, at the end of the day, if your timing is right, you should be able to make a profit. Not really rocket science, just plain statistics. And once again, we took out that pivot. Weekly pivot is right here at 24.69, and that's already been touched. Here's the monthly pivot, 126.76. Don't believe nope, we never hit the monthly pivot. I didn't think we had. We took out that daily pivot once again, so still 2 missed pivots this year and 2 from last year. And by the way, these are the daily missed pivots. And we can just take a look here at the weekly. We had 3 weeklies missed last year, 1 in 2017, none in 2016, 2 in 2015, and 1 so far in 2019. And you can see here, the last time we missed a monthly pivot was back in 2015. So that's just how strong those pivot trades can be. So what you can do when the daily session opens, trade toward the pivot. So when the month opens, first day of the month, trade toward the monthly pivot. First day of the week, trade toward the weekly pivot. And then on each day, trade toward the daily pivot. And you could just put a little, dime a pip trade on it and just sit back and watch. Make the pivot the target and collect your pips when it gets hit. Of course, that's for educational purposes only, and your results may differ. Price action, 2 ball at the top, red at the line, 1 ball at the bottom, so we're looking for a green at the line. Right now, that line would be the 124.90 line. And the wick zones, in and out, as usual, right? And you can see here, a lot of action on my favorite trading screen here. Short there, along there, shorting, and now collecting pips. And you can see here, we've got about 5 pip movement north-south. And looking here at the Einstein line. Remember, fellow traders, you can bounce back. So it's not what you trade, it's how you trade it.